to keep up these subsidies, $6 billion a year, and Lebanon, in the midst of a financial crisis, having defaulted on its $30 billion worth of debt last year, just doesn't have that money to be able to sustain this. So they're cutting back on these subsidies, not eliminating the subsidies completely. We'll still see the prices of wheat and medical goods tied to the old official exchange rate at 15.07 pounds to the US dollar. But in the black market, that rate is now up at 14,000 Lebanese pounds to the US dollar, just showing the dramatic depreciation that we have seen in the value there. Mr. Wozniak also telling us that he sees inflation for this year staying up very high, in part because of the elimination of these subsidies at something like 77%. And the best case scenario that he's projecting here for GDP this year is a contraction of 2 to 5%. That's, of course, better than the 25% drop in GDP we saw last year. But again, this outlook is pretty negative, Manus.
And the Israeli Prime Minister Benjamin Netanyahu, who was, we understand, supposed to be here last week, he didn't make the trip, but again, he's talking about more potential peace accords, more normalization. What's the latest? What are we hearing?
Yeah, he gave an interview with Ynet, a local web TV station there, and he said that there are 4 more countries potential to come into normalization deals with Israel. As you know, the UAE-Israel normalization deal that set off a chain of deals last year, called the Abraham Accords, was extremely popular, really marked a dramatic shift in Israel's relations with the Gulf region. And, you know, so it was extremely popular. We have an election going on that's going to happen a week from yesterday. And Netanyahu not an assured victor. We also heard comments from Jared Kushner. He was an advisor to the Trump administration, really credited with constructing those deals. And he said in an editorial in the Wall Street Journal that Oman, Qatar, and Mauritania might not be too far from their own deals with Israel. However, a lot of this may just be wishful thinking, bringing this up in the context of the election and talking about the potential for better relations with the Gulf. Certainly, the words we are hearing from Qatar's foreign ministry, for example, have not mapped out, not left open a lot of room for a normalization deal here. And that's something, you know, I think we can impute on other countries as well.
And in Iran, again, back to this 2015 nuclear deal, they are, some say, pushing the boundaries. So what's the latest nuance?
Yeah, Reuters reporting, and according to IAEA, the UN's Atomic Energy Agency, some internal documents saying that Iran is actually using more advanced centrifuges than it's allowed to under that 2015 nuclear deal. And this is a violation, essentially, of that deal, pushing the edges, the boundaries of what major global countries are willing to accept, potentially making it harder to return to that 2015 nuclear deal. There's lots going on in the region. We've seen a lull in sort of the back and forth between the U.S. And Iran over the past week and a half or so. But 2 other things that I would bring up, headlines that we've seen. One is about Iran's interference in the U.S. elections, and the second about Yemen, potential for massive famine there.
Thank you very much, Simone Foxman at the Qatar Financial Centre in Doha. We're going to catch up with Mike Brown, the CEO of this company, a little bit later on. It's Nedbank. The numbers for you. I think probably the most important point here is that there's no, not to declare a final dividend for 2020. The adjusted earnings per share, 11.13. Mike will be with Anne-Marie and myself just a little bit later on. So we'll go through how things look in South Africa and the dividend outlook. It's Bloomberg Daybreak East. Top stories this morning. Treasury is hovering around one-year highs as we head into the Fed's rate decision and quarterly forecast. Jay Powell promises to maintain aggressive support in the face of better growth prospects. Will the dot plot show his colleagues are with him? Meanwhile, one-time bond king Bill Gross is shorting treasuries. He sees inflation rising to 3-4% in the coming months. A former PBOC executive is warning China risks huge economic losses if it tries to curb asset bubbles through tightening. The CSI 300 is down more than 10% from last month's record high. And Saudi Arabia's economy contracted 3.9% in the fourth quarter of 2020, dragged down by the biggest slump in the oil sector for at least 10 years. Markets are moving. There are chip shortage warnings. Juliet Sally ties it all together from our Singapore studio. Juliet.
Yes, certainly the key theme of the day here in Asia, Manus, that warning from Samsung of a further chip shortage heading into the latter part of the year, weighing on a number of the tech players in the region, the likes of Samsung, also TSMC, and dragging the Kospi down by around 1%. This warning of a chip shortage impact in the second quarter from Samsung. India's market also retreating down by about 0.2%. Let's have a look at how Samsung itself is faring, as we remember that there are still a lot of very positive broker ratings on this stock, about 40 buys when you look at the Bloomberg, and Hyundai Engineering also a stock under pressure. We're seeing a little bit of movement in some of these defense stocks across the region amid reports North Korea could test its weapons again. Also seeing movement in the Asia automakers, VW saying it plans to replace Tesla as a global EV leader by 2025, and TEPCO, which is Japan's big energy supplier, down by over 10% in the Tokyo session, the most in 5 years. This after safety lapses at its nuclear power plant, adding an additional review now by the nation's regulator, Manus.
And there's been pretty wild durations on the equity side. CSI 300 moving again under pressure, but the bond market has a little bit more calmness to it. So what's the difference? What's the outlook?
Well, the outlook here, according to some analysts, is, as you've seen, this somewhat correction coming through in the CSI 300 that has widened the gap between what you're seeing in Chinese bonds and also Chinese equities. And in fact, the yield offered by Chinese equities now over the country's bonds has rebounded to the widest since November. And that means that many analysts are saying you could see a reason to get in here with Chinese stocks looking more attractive versus bonds after this recent sell-off that we have seen. A gauge of CSI's 330-day volatility at its highest level since August. So analysts flagging that cyclicals and technical factors could lend support to some of these shares, which, as we've been talking about, Manus, have been underperforming what you've been seeing globally, the strongest level of that underperformance since 2016. Manus.
Jules, thank you very much. Juliet Sally putting the markets together from our Singapore studio. Juliet, we'll see you in a little while. Hydrogen